Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Tuesday. It's March 1st, and I'm hoping to God, I'm praying right now that March ends up being just a little bit better than February. I mean, talk about a horrible month, right? March is here. Let's hope the worst is behind us. Now, Russia, Ukraine, there's a 40-mile convoy headed to Kharkiv that is supposed to be coming in and causing more destruction. The stock market, as you can see here overnight, we are near the lower end of the range. We're actually right now just about 50 points away from the lows. But the range is a little bit more subdued than yesterday. When I say a little bit more subdued, yesterday, 450, 500-point swings versus 240-point swings. The bottom line is we have a lot of unforeseeability. Now, we had Fed data yesterday. We had international trades in goods and services, which came out a little bit soft. We had the Chicago manufacturing. Today we have the PMI manufacturing, the Red Book, which is same store sales private report, IS manufacturing index. Today we're going to get a good idea of what business to business costs and how much inflationary pressure has impacted manufacturing prices. That's going to be on the table today. It's going to start off a little bit later, right after the market opens. So if you see a little blip in volatility, which I don't think we're going to get, because the war is overriding most things. Tomorrow we have an ADP employment report. Both the Red Book and the ADP employment report should give us a better indication of where we stand on the employment front. But as I mentioned, right now, the biggest factor that's driving this market is war. Let me give you a little update, and then I'll get into the technicals. So U.S. markets were headed for a decline on Tuesday after talks between U.S. and Ukraine, basically Russia, not U.S., Russia and Ukraine basically didn't do anything. They're going to talk again. A 40-mile convoy of Russian tanks was threatening Ukraine's capital in the sixth day of the war as Kremlin grew increasingly isolated. Now, let me give you some feedback. Russia's spending about $9 billion a day on this war, and they're running out of money. And that's a big, big problem for Russia because nobody's helping them like NATO, which is helping Ukraine substantially. A first 5-hour session of talks ended with an agreement to meet in coming days. I don't think that's going to do any good. Now, Russia is a major energy producer, and surging oil prices and increased financial pressures from the U.S. and allies on Russia for its invasion on Ukraine were adding on to the uncertainty. I mean, interest rates I think are 20% on the bond yield right now because the ruble is so weak. Value of the Russian ruble plunged to a record low Monday after Western countries moved to block SWIFT. Also Monday, the U.S. Treasury Department announced more sanctions against Russian central banks. The ruble was trading for 97 to $1 Tuesday. Jeez Louise. Up more than 10% from its nadir of 108 per dollar earlier day. Russian markets are closed early Monday, remain closed today. It's probably for the best. Governors, lawmakers in numerous U.S. states seeking to add the financial squeeze on Russia were taking steps to pull state pension and treasury funds out of investment in Russia-held entities or Russia companies supporting the war. Of course, investors already were on edge before invasion in anticipation of the Federal Reserve's plans to hike interest rates for the first time since 2018 to counter inflation. Not sure that's going to happen right now. We'll get into the bond market in a minute. I think the Fed may have a way out. The Fed is treating a tightrope. Yes, treading a tightrope. They're literally walking on the razor's edge, needing to raise rates enough to curb inflation, but not so much as to choke the economy into a recession. It's a real big balancing act. Higher rates are going to put downward pressure on stocks and cryptos. Not sure why cryptos too much, but stocks for sure. The war in Ukraine is raising expectations, and this is what I was talking about earlier in the week and last week, that the Fed and other central banks may have to adopt a gentler approach to raising rates, which is why the bond market is up almost 2 basis points. Federal Chair Powell is to testify before Congress later in this week. This is going to be really important. He's going to be talking. When is he talking? Let's see here. John Williams, factory orders. When is he talking? I know it's either Thursday or Friday. They're going to be talking. But let's talk a little bit more about pre-market. A report on Friday will also show whether a strength in U.S. job markets, don't hold your breath, continued in February, allowing the Fed more leeway to raise rates. Energy $100 a barrel. Jeff Zananeri and myself told you over a year ago, 13 months ago, we're going to get up to 100. International standards, it's $103 Brent crude per barrel. So don't expect energy prices to cool off anytime soon. Now, talking about the bond market in light of everything, and folks, we're going to short the bond market at the open because I think this is grossly over-exaggerating. I think it's going to fill this gap. But as you can see here, bonds have been going higher, not lower. Higher bonds means lower rates. And again, I'm not anticipating the Fed to really bend over for us, but they may say, in light of what we're seeing right now, we're going to have to cool things off for a while and see how this war goes. But the bottom line is, I don't think they're going to get as aggressive next month in light of the trading action we've been seeing. If they are, I would be very, very surprised. But again, if they raise rates, bonds go lower, interest rates go higher. So again, I'm going with the direction of the trend on a major, major pullback that's pointing us towards overbought levels. And I think we're going to cool off. So I'm going to go ahead and sell this on the open. If you're in any of my discretionary programs, you'll probably receive that signal before the opening bell. My discretionary program, not the rotation programs. Now, put the call ratio and keep your eye on the bond market, because as the war cools off, bonds will go down. As the war heats up, bonds will cool off. Or go higher. I think the worst is almost behind us. I don't think we're going to get too much deeper into this war because, again, Russia is running out of money. And these sanctions, folks, oh boy, these sanctions are not helping anybody out at all, okay? Put the call ratio is favoring right now the fact that the market's going to cool off further. Anything over 1 is oversold. We're at 95, and we've been trading. We're cooling off the 125. Momentum levels, as I mentioned to you guys the other day, I want to show you these. Momentum levels right now are weak as well, so I don't think the downside is that extreme. Let me show you on a 5-year basis. Let me go ahead and even this out here. Who moved my cheese? Look at this. This is beyond 20%, and as you can see here, we don't really go beyond these levels very often. This is COVID, which, you know, the world coming up apart, people dying. This is the 2018 rate hike, and we're right here. So maybe we'll cool off, maybe go a little bit lower. But honestly, I think the worst is behind us. If you look at it on a 10-year basis, I mean, look at where we're at right now. Maybe a little more here, maybe a little bit more there, but not too much. Also, volatility has been going really, really high. If volatility continues moving higher, we're going to sell volatility as well, because you could see here that volatility is usually mean reverting, and as it goes up, it comes off. This is the asset you would sell, and actually, let's see how it's looking right now. Haven't looked at this in a while. We shorted this and made a profit on it yesterday, but it went higher again. So, yeah, I think we sold it around here and then got out right over here. The bottom line is, I think volatility is going to cool off. I don't think this trend is going to last very long. And ultimately, as you can see here, this is a downward trend. So if volatility spikes again, we're going to be selling it. Let's look at sectors. Now, energy is leading as it's been leading. Let me show you something. Let me show you the power of the CSI scan. It's February 28th. This is yesterday's data. Let me go back 1 month. Energy, communication services, January 26th. Let me go back another week. Energy, communication services, January 19th. We're in March 1st. Let me go back another week. Energy, communication services, January 11th. Let me go back another week. Technology. So second week of January till now, we've had energy and communication discretionary. For almost 2 months, the same sectors have been leading and lagging. Now, in terms of the strongest stock, oh boy, Devon Energy. Weakest stock, PayPal, Meta, Gap. Now I'm going to go back. I want to show you this. Why do I use my CSI scan? Let's go back a month. Devon Energy. Let's go back another month. Artista, that's already December. So let's go back to today. Devon Energy. How about the weak stocks? Let's go a month back. Moderna, Twitter, Netflix, PayPal, Etsy, generic. Let's go to today. PayPal, Meta, Gap, Moderna. Not all that. Twitter, not all that different. The bottom line is this stuff works, and it works well. Devon Energy. Energies are still the strongest sector, and Devon Energy is still the strongest stock. It was up quite a bit yesterday. I'm waiting for a little pullback to get back in, but I think the trend is going to continue. I would not buy this till we hit maybe the 52, 53 level, but there's definitely a good buy opportunity there. Now, folks, as far as the SPY is concerned, major levels, again, you got to pay attention to these levels. 438.70 on the upside, 430.20 on the downside. On the QQQ, the major levels are, let's go to 3-month. The major levels are 349 to the upside and 337 to the downside. The major levels on the Dow, let's go look at the Dow. The major levels on the Dow are 34,120 or 341.20, and the bottom is 33,270 or 332.70. Again, 34,134, 33,278. Those are the numbers on the Dow. Now, let me look at some chip stocks for you real quick, or the semiconductors, because I think as the NASDAQ rallies, we're going to get some upside, and we're staying right below the 200-day line. So if you see a breakout on SMH, on the chip stocks, above the 273 level, that's very, very, very positive. Overall, keep your eye on the bond market. If the bond market starts filling this gap, it's bullish for the overall stock market. All right. If the Dow Jones breaks above the 341-ish level, very bullish for the stock market. Overall, I would be focusing on ETFs right now instead of individual stocks. They'll give you more bang for the buck. Also, a sector you may want to short is the biotech. I think biotech is going to be going down no matter what. So you can use any opportunity to the upside to sell this sucker. It's definitely a bearish trend. Look at this. It's been going down, 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 and there's no reason for biotech to go higher. All right, now before I let you go, I've got something important. I know you guys value these videos. I know you benefit from them. The unfortunate news that Russia began its invasion of Ukraine instilled a sad time for the world and a volatile one for the markets. While most of the world is glued to the news, traders are looking for a safe haven to their money. Wartime is a time to get offensive, folks, not defensive. The market bottoms out during the worst periods. And while a trader's first instinct might be to react in fear and sell their stocks, smart investors usually know pricing usually happens before the event. Things are priced in ahead of time, meaning that from a historic perspective, stocks generally bounce hard after the initial sell-off of war. I'm going to repeat that. Stocks typically bounce hard to the upside after the initial sell-off of the war. Now today, at 1 p.m. Eastern Time, today, it's happening today, I'm going live to give out 6 stocks that I'm tracking and show how to take advantage of a major pullback that we're seeing right now. Folks, do not delay. Follow the link below. It's happening at 1 p.m. Eastern, Tuesday, March 1st, today at 1 p.m. Eastern Time. Do not miss out. Follow the link below, access my free ebook, and save a spot for today's event. You don't want to miss this out. It's going to be hot. And tomorrow, I'm going to give you 1 long stock, 1 short stock, actionable trade ideas. If you're watching on YouTube, follow the link below this video. Go to Wealth Press YouTube channel. There's a link below this video. And if you're watching on a Wealth Press site, you should have no problem following the link below this video. Again, this is the time to watch me live. I'll answer your questions. I'll give you hot tips. I'll give you some freebies. You guys are going to love this. Spend an hour with Uncle Roger. Why not? And if you guys are getting value out of this, send me an email, support@marketgeeks.com. Love you all. Take care. And we're going to get out of this in one piece. I promise you that. Bye, guys.